Hey everybody, Gary with Basecamp Trading. Let's take a look at a setup we had in gold this morning. You can see in the overnight session, gold moved higher, and it moved higher right into the London session, and then put in this reversal doji, triggered to the downside, and then gold worked its way lower actually throughout the London session, causing all the moving averages to cross to the downside. Price broke under the 50 EMA support. Again, we know that the 50 EMA is significant on these 30-minute charts. Broke underneath it, came back, tested it with the next bar, actually popped above it just a little bit, closed underneath it. And this is where the ghost pit was getting ready to open. Gave us a nice bear flag setup right here. Momentum had already turned bearish, so we had bearish momentum, bearish moving averages, and a 30-minute bear flag. Next bar triggered into the trade, and then we knew we had significant support at this previous overnight pivot low, because this pivot low went all the way back into the Asian session, and actually gold did kind of run down here, and it actually made a little bounce off of this a couple times before it finally broke through and headed lower. Traded down into our target. We hit significantly undervalued on the 30-minute chart. Again, on the 30-minute chart, we know when we hit significantly undervalued, we're going to get one of three things. We're going to get a pullback, we're going to get consolidation, or we're going to get a reversal. Typically, what we'll get is a pullback with consolidation. Now, this particular time, we actually got a pretty big run back the other way. It wasn't a full-blown reversal, but you can see that we made a big run back the other direction, put in another reversal doji, triggered to the downside, and gold's pushed a little bit lower and just mostly choppy. And that makes sense. You know, gold had made a pretty big run. You figure your overnight high was in here at 1790.40, and we ran all the way down to 1766. So, a little over $24 off the high in gold. That's a pretty decent move. So you'd already made a decent move, and we were able to catch kind of the tail end of a pretty good move. This is what it looked like on the Renko chart. You can see this is where gold was pushing down through the London session, and then coming into the U.S. session, actually while the morning market recap was going on, we set up this wick off the 18 for a push down in gold, and then we were getting ready to go into the ghost pit open. The ghost pit open in gold is 7:20 Central Time, and this kind of action you get a little back up and a little chopping up and down as traders are squaring their positions and getting ready to take a position. Right here on this wick off the 18 is where we triggered in that 30-minute bear flag. So you had a potential entry right there. We knew we had support right here, and you could see we ran right down to this support, and we bounced off of it a little bit, set up another wick off the 18, and then broke on through it. But we bounced on it several times. You see these little wicks right here? You can see we were bouncing off of this. This was pretty significant support. So if you wanted to play it conservative, could have waited for the support break. More aggressive trade was the bull flag, and then the continuation off the 18. Just, again, depends on which trade you were looking to take. This 30-minute bear flag was actually a good setup. We were already in a downtrend, pushing lower, bearish momentum, triggered in the 30-minute bear flag, and we're able to run this down. And we bounced a little bit. Trend Pro 2.0 did not take us out of the trade, and then we were able to trade down into target. So if you took the bear flag, your entry would have been somewhere around 1775.30. So you had the potential to grab at least $800 per contract, because this actually pushed underneath our target. But even if you traded down to target, you were able to grab at least $700 per contract on the bear flag. If you waited for the more conservative entry, you would have taken the break of 1773.30. Still potential to grab $500 or $600 per contract. Again, depending on whether you took your profit right at the target or if you let it run a little past that, just all in how you manage your trade. But again, off the bear flag, potential to grab at least $700 per contract, and off the support break, at least $500 per contract. So a couple pretty decent opportunities early on in gold. Ended up chopping for quite a while after that, but at least we were able to take advantage of a couple of nice short moves. Again, right in here, we hit our profit target. We were significantly undervalued on a 30-minute chart, and we know that's definitely a good place to, at the very least, tighten your stops or consider taking profits.